Hello friends. In today's video, I want to talk about Peloton Interactive, ticker symbol PTON, which crashed over 35% on Friday after the earnings announcement. As you may already know, Peloton is an American exercise equipment and media company based in New York City. Peloton's main products are internet-connected stationary bikes and treadmills that enable monthly subscribers to remotely participate in classes via streaming media. The company's products were in the market even before the COVID pandemic started, but the pandemic helped in explosive revenue growth as people were forced to stay at home and look for alternative fitness resources. As you can see here, with the world slowly returning back to normal, the revenues have also started trending lower. So the revenue was over $1 billion for a couple of quarters during the lockdown, and now it has fallen back towards the $800 million mark. This is the major reason for the 35% crash in the stock price. Another reason for the bearish sentiment could be the significant negative operating cash flows, which was negative $561 million for the quarter. This is obviously an indication that the company will likely need to raise more capital to sustain over the next few years before they hopefully become profitable. So more capital required means more stock dilution, which will end up putting more downward pressure on the stock price. In addition, their margins are also not very attractive at this point. Even though overall they have a 32% gross margin, the hardware side of things is accounting for only a 12% gross margin compared to the subscription margin of 67%. Even though that is impressive, without improving on the revenues for their hardware products, it can be argued that the subscription revenues and margins could also slow down significantly. And coming to their net margins, the current quarter resulted in a $367 million net loss. Now let's talk about the most important question. Is it a good time to buy the stock, or is there more pain in store? Honestly, I don't think anybody has the right answer, but we can look at their current numbers and make some future projections to try and figure out a fair price to pay for the stock. So let's look at some scenarios here. As you can see here, I have listed 3 scenarios and input a range of revenues the management expects for 2022, ranging from $4.4 billion to $4.8 billion. And based on this, if we make an estimation of how much their revenues will grow in the next 5 years, and also estimate what their net margins will be, we can project what their market capitalization will be after 5 years. So with these assumptions, in scenario 1 and 2, we will end up with a loss if we invest at the current market price. Only if scenario 3 plays out, this investment will be profitable. And before deciding to invest, we should consider all the headwinds the company would have to face, like more customers choosing to return to public fitness centers, continued global supply chain issues, increased marketing costs, increased research spending, reducing pricing power and margins, and also the potential competition from other small and big players who may enter into this industry. So given this, the only way I see scenario 3 playing out is if the management completely transform their business model and focus more on how to grow the subscription business and decouple the reliance of their subscription products with their hardware products. Maybe this is what the management wants to achieve, so we will have to wait and watch. Personally, I think there is more pain to come, at least in the next few quarters, which will likely drive the stock price lower. So I am bearish on the stock and plan to buy long-dated put options to take advantage of the situation. But I will probably wait for a bounce back in the stock price before buying puts, just because the stock may rebound in the short term purely from a technical perspective. As you can see in this price chart, I am hoping the stock rebounds to the high 60s or low 70s, which would be good resistance levels to initiate a short trade. Of course, this may not happen as the current price is far away at $55, but I prefer to wait and watch instead of rushing into this trade. I'll certainly post an updated video in the coming weeks if I end up initiating the trade. Hope you liked this video, and if you got any value from it, I'll really appreciate if you can leave a like and subscribe to my channel. And as a friendly reminder, please note that I am not a licensed investment advisor, and my videos are only meant to document my views on various investment related topics that I am interested in. Have a great day, and I'll see you in the next video.